Welcome to Wealthy Mind, where we talk about all things finances, the good, the bad, the ugly, and the surprising.
Welcome to Wealthy Mind. I am your host, Misty Rose Gold, International Success Coach, and today I have with me Steve Selengut. Did I say that right?
You sure did.
Yay! Well, thank you for joining us today. How are you?
I'm good. Good, Misty.
Good.
I've been
Excellent.
looking forward to this conversation.
Me too. You are such an interesting guy and you have a lot to offer. So tell our audience what business you have, what it is that you offer for the world.
Uh, what I'm doing right now is really kind of like a retirement gig. I sold a business and I've written a book called Retirement Money Secrets.
Mhm.
And using that book as a guide for people with their investments, I've started a coaching business.
Okay.
And the coaching business is primarily to get people's mindset changed so that
Hmm.
they're thinking of generating enough income to have the income independence to make decisions about what they're going to do with their life. I mean, a lot of people get caught up
Hmm.
in businesses and they may not be happy with it or they want to start their own thing, but starting your own thing takes money and somebody's got to fill the gap of the money that you need before your business gets on its feet and takes
Hmm.
off.
Yeah.
And what I do in my income independence coaching is I put people into the position where they can do that. They have enough investment income um, to go ahead and change their lives if they choose to.
So
So
is the investment income there so that they can self-fund their business?
pretty much, or if nothing else, they can not alter their lifestyle while they're trying to grow a business. Because you got
Mm,
to make an initial investment and then you have to develop a clientele. You've got to, who knows, you may even have to have a business plan to get the bank to fund you. There's all different kinds of
hmm.
businesses. In my case, the first time I had to do this, it was simply saying, hey, I'm making 5 times my salary. I'm commuting to New York and wasting all that time and money. I don't like wearing three-piece suits and ties. So I can teach other people how to make this kind of money. I think that could be a good business. And that's what I did. And I
Mm,
just gave my notice and left.
awesome.
And that was it. And fortunately, my wife, she was working at the time, so she didn't panic about it. But she said, "You better be right about this, let's see."
Yeah.
But she said the same thing about the coaching thing too.
Hmm.
She wasn't quite sure it was going to work. I'm an optimist and she's a pessimist, so we make a good match.
Mm,
You
that's
know?
good. That's good
Yeah.
that you
So
have a good support on,
yeah.
well, it's a different kind of support. I'm sure she's supportive of you, but she's also questioning everything you do.
Oh yeah. She is a woman after all. I mean, really.
Hey.
And that's a good thing. And that's a good thing because a man who is directed by an intelligent woman is a much more likely of being successful than one who's going just on his own ego trip.
Well, that
In,
is why I am
in,
in
in my
business.
opinion, in my opinion.
That's why I'm in business because men need that trusted support and guidance, and they don't always give that to another guy,
Yeah.
but they
So
will give it to me faster than they'll give it to another guy.
yeah, I understand that.
Yeah.
So my whole career since I was even before even when I was working in a pension investment department. So I was
Mm.
still in the kind of in the money
Mhm.
atmosphere and
Mhm.
My father had his own business. He was a real estate developer and he developed multiple streams of income, which is really what I bring to the investment process. Most
Mm,
investment people you talk to focus more on growing the market value of their securities, their investment. I focus on growing the income
mm,
and making you in a place where your income goes up every quarter, your capital rises every quarter. Um, I was to finish this story.
hmm.
I developed a private investment management business that went from, let's say, mid six figures in 1979. When I sold it last in 2023, I was managing $110 million for maybe 140 different families throughout the country and some overseas. So it was, and all of them could say that they had enough income to take care of their expenses because their expenses, I would send, or my staff would send them a check every month for the amount of money they wanted to get in retirement, or if they weren't retired, some of them didn't take any money out, but those who did
Hmm.
would get the money from their accounts, but it but we would be always making more for them than they were taking out.
Mm, that's brilliant.
And that's what I did. That's what I did.
Okay, now I have a question for you. So, as an income independence coach, are you still managing people's investments?
Only my own.
Only your own.
Only
Okay.
my own. Yeah,
Well, now,
I no longer have the license or the I'm not working through an RIA, and for these kinds of this kind of investing you need to have somebody like that sponsoring you, and you have to there's a lot of rules and
hmm,
regulations. My
hmm,
God, there's so many rules. So you need compliance type people to make sure
sure.
you're dealing by the rules. So no, I no longer make decisions for other people. I just give them the information they need so that they can make their own decisions.
Okay, so you can give them advice on different types of investing and
Types and
yeah,
different strategies and what we'll do, but I'm not going to go out and say, buy this particular
correct.
security. I'm
Right.
going to say, here's a list of 40, 50, 100 securities that fit, that I've looked at, that I own
Mm.
myself, but you have to look at them and research them and see if they fit your situation like they do mine.
And then do you recommend a financial advisor to them or do they find their own?
Some of them can try to vet people to do it the way that I propose in the book, but I do have a guy that I refer people to if they don't want to do it themselves.
Okay.
I find that after a couple coaching sessions, I can build up the confidence and understanding and simplify the process enough that most people find, yeah, I think I can do this myself.
Okay, so let me understand. You are empowering people with the right information to make their own investments and not have to go through a financial advisor?
Right. In lots of instances, I would say of the oh, I've coached maybe 140 people since I started this business.
Mm,
I would say that all but three or four of them are doing their own thing. There's a couple that have very large portfolios, not the seven, but the eight figure
mm-hmm,
size.
mm-hmm,
So they may be managing half of it themselves and having an advisor take care of the rest
mm-hmm,
and telling that advisor that he's got to talk to me so that I can, or at least read my book so he knows,
mm-hmm,
what he wants them to do, stuff like that. But most people, you'd be surprised. Most people, once they start thinking about seeing the income and they start thinking about profit taking instead
mm-hmm,
of holding on and worrying about right now, the Dow is down 10 days in a row for the first time in who knows how many years. There are people out there who are starting to panic. They're getting scared.
mm-hmm,
You know, I'm loving it because that means the good quality things I own are going a little bit lower in price. Now I can buy more of them.
mm, yes.
So it's a whole different mindset. Once you have, I guess it's almost like in any other business. Once you're confident that the product you have or the system you have is high quality
Mm-hmm.
and it's weathered the storms like this before, you
Mm-hmm.
don't panic when it goes down. You say,
Right.
okay, this gives me an opportunity to shine.
Mm-hmm.
My product's still going to work and I'm still going to be able to provide it to my customers. In
Yeah.
my case, my methodology, the securities I invest in, they're still going to pay that monthly distribution. They're going to still pay those dividends. Doesn't
Mm,
matter that the stock market's gone down. And that's a
okay.
real, aha moment for a lot of investors.
I know that people, I've heard of tons of people over the years playing with the stock market and doing their own thing apart from a financial advisor. Is that the realm that you typically stay in with your clients? Do you
Well,
have them go toward the stock market?
except for the one word you said. You said playing around in the stock market.
Mm-hmm.
There's no playing. I mean,
Yeah.
it's a serious business. Your investment portfolio is really your business. And I treat it like a business. Like
Mm,
I know the quality of the merchandise on my shelves. I know how dependable it's been over the years. Like I know they all have warranties, so to speak,
mm,
because I study how long they've paid stable or rising distributions. So I know all this stuff. So when I have them, I don't
mm-hmm.
get concerned with their fluctuations. Instead, I take advantage of their fluctuations. When they go up a small percentage, for most people in the stock market, 5% or 4% would be, oh, that's nothing. But let's say it was $100 and you're walking down the street, you wouldn't pass it by because it wasn't a big enough amount of money. In fact, most people, if they're walking down the street, if it was $1, they'd pick it up. That's how I look at profits. This is found money. The stock
Mm,
market goes up and down forever like this. And if you can cherry pick one of those profits at any point in time and reinvest it to grow more income, it's
mm-hmm.
to your benefit. And that's pretty much the theory, the principle, the strategy that I'm using. I'm using the best possible investments that I can come up with by researching them and setting strict standards of
Mm-hmm.
quality.
Mm-hmm.
And then if an investor comes in and says, "Okay, I'll buy that from you for more than you paid for it," I feel I'm just like a department store. Of course, I'm going to sell it to you, and then I'm going to go find something else to put on the shelf to replace it. So
Okay.
it's certainly a different approach. It's not one you hear about very often. People actually look at you funny when you say you trade because they immediately think the gambling like day trading. That's
Mm-hmm.
not this. That's not what this is at all. This is profit taking.
Mm, okay. So let me see if I understand this correctly. You are an income independence coach for those who want to independently invest in the stock market and treat it like a business?
Yeah, in the stock market and in the bond market as well. I mean,
Stocks and
there are
bonds.
multiple types of securities. There's stocks,
Okay.
there are bonds, there are preferred stocks, there are loans, mortgages, business development corporations. There's any number of different types of investment vehicles out there.
Mm-hmm. Mm-hmm.
Stocks are the most visible. They're the ones that get the most play, the most excitement. But there's actually more money in income-based securities than there is in the stock market.
And what are
Because
some of those income-based securities?
municipal bonds,
Mm-hmm.
when companies borrow or um, municipalities, cities, states borrow money, right? They have bonds. Corporations, there's probably not a corporation listed on the New York Stock Exchange that doesn't have some debt on its balance sheet. And that debt will take the form of notes, loans, mortgages, preferred stock. You know,
Mm-hmm.
gazillions of dollars are in debt securities, but they don't get a lot of attention because they're not all that exciting. Um, a bond every 6 months, you get a payment. It's like a a coupon. It comes to your account. You know, you own this bond from General Motors or something like that. They're paying you the percent every 6 months. You get a check, and that's about it. They don't go up in price like the stock market does. You know, they don't fall as much. It's all a function of interest rates. So it's kind of boring. And the thing about particularly the securities I use, which is a type of trust fund,
Mm-hmm.
um, they don't go up in price a lot because they pay out 95% of their income. So if you could imagine um, NVIDIA or Microsoft even or
Mm-hmm.
Amazon, if they were to pay out 95% of what they made, what their profits were to their shareholders, they wouldn't be trading at the price they are now, and they wouldn't have grown to the how they do.
Mm-hmm.
So the trust vehicles, the closed-end funds is what they're called, are trusts that have to pay out 95% of their earnings. And so that's what their purpose in life is. Okay.
Mm.
Their
Okay.
purpose is to give you a stable, steady stream of income. It's not to grow in market value to make you feel good. The
Mm-hmm.
On top of the title in the book, there's a phrase there. It says, "Market value fuels the ego, and income fuels the yacht." In other words, you
Mm.
can't take your you can't take your portfolio statement, that seven-figure portfolio statement, and go anywhere and show it to somebody. See, let me have that product. I want to do this. I want to have dinner here because I'm wealthy. They say,
Mm-hmm.
no, no, sir, I'm sorry, but we need money. You have to give us cash. And
Mm.
you'll find, and I've found portfolios with millions of dollars, literally millions of dollars in securities, all at very high profits from when they originally purchased, but throwing off 2% or less in income that could actually be spent.
Mm.
And that really bothers me,
Sure, sure.
especially
So,
when it's a retired person.
yeah. So 100%, this is a different thought process. And if anybody in the audience is looking for a unique way to invest or a new way to invest or a different,
Different way.
different way, a different thought process around investing, Steve is definitely going to be the person that you want to reach out to for that. So this is very interesting to me because I get different types of conversations going with different types of people and different types of financial experts.
Right.
So this is a first of somebody saying that, hey, let's invest in bonds, let's invest in these trusts, let's go this route. And I think we need more of this type of education. I
I
really
I
do.
I would agree with that totally.
We
You
need to
know,
know that there are different options available.
yeah, and it's not and you can use the stock market. These trusts do invest in stocks as well as
Hmm.
bonds and the other securities. A portfolio of closed-end equity funds today uh, can yield you well over 9%.
Hmm.
And that's
Okay.
just the distributions you receive. And then if the market's kind enough to go up, you can take profits. Right now, in the past days, what most of us have been doing is taking the income that we're receiving and adding it to positions that have gone down in price over the last 10 days.
Hmm.
Because we've had this little, nobody's even calling it a correction yet. And it's really
Okay.
not percentage wise. But people like me hope it gets to be a correction
Hmm.
because
Yeah.
we get so much income every month, you know, that we can put it to work and grow our income,
Hmm.
take advantage of the lower prices.
Excellent. So would you say you have a special gift for investing?
Do I have I don't know that I have a special gift. I have a unique way of looking at it. It's a bit more creative. Initially, it's hard for people to wrap their head around. It's a little different. Is it a special gift? I don't. I. It's an opportunity that I noticed and I jumped on.
Well,
You
it
know?
might be. So
And
I'm
there,
specially gifted in my expertise.
well,
Now, those of us that excel in the expertise that we're functioning in, we're gifted somehow, right? So,
I I guess in that type of in that term, yeah, sure.
I
You
mean,
know, it
who else has
right.
the understanding that you do? So,
Well, yeah, the understand, but and the opportunity to do it without being regulated or controlled by an employer. I think there's a lot there. Um,
mm,
if people in the industry, if financial professionals had the luxury of doing their own thing,
hmm
maybe they'd be more focused on income investing than they are in chasing market value. Because I think the key issue is that financial advisors get paid on assets under management.
hmm
So their primary interest is to seeing that bottom line value, the market value grow because they get paid on growth of market value.
mm,
If their market value is, let's say over the course of time it only grows 2 or 3%, but they're paying their customers, their their clients are earning 10% and spending 7% on that on their lifestyle, so their market value is only going up by 3% or more, they're not going to get raises or bonuses from their employer. And they're not going to make as much money as the guy at the other desk who's investing in the high quality popular stocks of the day that are going crazy in a market rally and generating high market values, be they temporary or not. They're going to make a
hmm
lot more money. It's going to be a lot more exciting for them, but not for their clients. And see, that's
yeah,
the distinction. I was fortunate enough that I my portfolios, I was generating enough money of my own without what I was getting from my clients
hmm
for their portfolios, that it didn't matter to me. I mean, I used to, when we had a correction, I remember back in the dot-com bubble, when that was in the turn of the century, when the tech sector really just first got started and went
hmm
crazy up, and then all of a sudden, zap, it went down. And I wrote to my clients, even though some of our prices had gone down as well. I said, the bad, it's all the bad news is that your market value's gone down. The good news is twofold. One, the amount of income you're getting every month hasn't changed, and it will go up. And number two, you're paying me a lot less because the market values are down.
mm,
And I didn't care about that because
yeah,
I was also getting the same income that they were, and I'm doing the same thing with my money as I am with their money. So I'm
mm,
taking advantage of the downturns, and I was doing that for them. And now I'm teaching people how to do that for themselves.
that sounds good. And, a lot of my listeners are business owners. So you had mentioned that your strategies are good for exit planning.
Oh yeah. I mean, I've done it twice. I
Yeah.
remember, like earlier, I was working in New York. I was a real grunt. I wasn't going anywhere I didn't think. I was in their training program. I got a couple little raises and a couple little promotions, but I was there 10 years and I wasn't, my wife was paralegal. She was making more money than I was,
Mm,
you know, and not that she shouldn't have. I mean, being a paralegal was probably just as difficult to get as the education I had, but still, she didn't have to commute to New York to make that salary either, and I did.
mm,
You know, so but my investing, I was fortunate enough to get this hunk of money when I was 25, and I was investing it. And by the time I was 34, I was generating 5 times my salary in income, and
mm,
some of it was even tax free. And so I said to her, I said, geez, what am I busting myself going to Manhattan and doing all this stuff when I can make this much money? And we know enough people that have money that I can show them the numbers and they'd be interested in me doing this for them. And it worked. It worked. I
okay.
did that. I got 2 guys to help to start with, start, and then after a while, it just grew and grew and grew. At one point, I had 3 employees before we moved to South Carolina. And now, then my wife started working for me for the first time,
Hmm.
and so I did that, and then here we go again. I'm getting old, getting very old,
Ah,
and
you're getting older, not old.
when are you gonna stop? When are you gonna put it down and say okay?
Yeah.
So we decided in 2023, we actually got an author that we couldn't refuse. I mean, it was the equivalent of 6 years' income in advance,
Hmm.
you know? So I said, okay, we'll do this. And we did it. And in the financial services industry, when you sell your business,
Hmm.
you don't get all the money up front, you know?
Hmm.
You get maybe a little more than half. And then a year to 18 months later, you get a little more in a year, and then in the next 6 months you get two more little bits until it's all done. And you
Hmm.
have to jump through hoops to get all that money. You have to make sure that the AUM, the amount under management, hasn't changed.
Hmm.
That you haven't gone to work for somebody else and stolen the clients away
Right. Right.
or influenced them to leave. So you had to do all this. So if you didn't have a significant stream of income, and you can imagine, I had 110 million under management,
Hmm.
and the average, and I was getting about a third of the fees, and average fees were about 1.7.
Hmm.
So figure it out. I mean, I was making a lot of money,
Yeah.
and if I couldn't replace that from my own portfolio, I was going to have to sell stuff.
Hmm.
You know, we wouldn't
Yeah.
be able to go to that European tour or to Australia or Morocco or wherever it was on the schedule if I didn't have that income. So I had it. So I was able to exit with that painlessly,
Hmm.
painlessly.
Hmm.
And I would have been able to do that if I was just changing from one profession to another almost at
Hmm.
any time because I always had that income that was about the same as I was making while I was working.
Yeah. So separate streams of income. I know that's really important.
Really important, particularly for an entrepreneur. They have to know that we just can't, you can't change Ferraris every year. You got to put some of that money into
Hmm.
your future income stream.
Sure.
You got to do that.
Yeah. Resist the temptation to do flashy things, right? So,
Exactly.
um, let's talk a little bit about mindset around money because, this is the Wealthy Mind podcast. So, how do we keep our thoughts focused in a positive direction or healthy direction around money from your perspective?
Yeah. I don't know. I guess I always had a lot of things to do with it, other than my own pleasure and travel and fun. I had a granddaughter that had to get educated, so I putting her through college. You help your kids with, getting a home, getting their first
Mm,
homes and stuff like that.
mm.
I never had any hesitation to do those types of things.
So was that
So,
part of your motivation was focusing on something outside of yourself?
well, it was always other than myself. I mean, my wife and I, we go back a long way, and taking care of her and whatever her needs happened to be were our needs. That was the primary motivation. I didn't ever
Mm,
want to say no. No, we can't go do that. No,
mm,
we're not going there for dinner. We can't afford it. I never want
mm.
to say those. I didn't want to ever say those words. No, we can't afford it.
Okay, so you like to be a provider.
Yeah, well, yeah, a provider, a partner.
Yeah. All
Yeah.
right. How can you take your experiences in that space and condense it to like one sentence that can help people shift their money mindset that's going to be a bit healthier for them?
Oh boy. One sentence. Can I use a semicolon?
One sentence.
Okay. Well, I think what I've found over the years that uh, my sentence would be change your focus from chasing market value the height, the thrill of high numbers in your market value, and switch them to looking at the growth in the income that you are providing to your family through your investment efforts. Something like that.
Okay. So I'm
I
trying
don't
to
know. I don't
think.
know if that's really what you wanted, but
No, it's close, but I need something,
not quite. Not quite. Okay.
something a little bit different that can start to create new neurological pathways within their mind. So some people have, a lot of people have different thoughts around money. They have different thoughts around investing, but um, more of there's so many limiting thoughts of, can I even do this?
Oh
Does that
yeah.
make
I mean,
sense?
yeah. Am I
So,
skilled? Do I have the education to do this? Maybe
right.
a better way of approaching it would be um, something like you owe it to yourself to become educated in the different ways you can invest and the different vehicles you can invest in. And
Mm,
then you can use that knowledge to create the streams of income you need to create the type of environment you want to live in with your family.
I like that. You owe it to yourself.
Yeah.
That would be
Yeah.
the phrase that people
Yeah.
can take away from this and then start thinking about or saying out loud or
Yeah,
writing it
because really,
down.
really, when you think about it, it all boils down to education, either by personal experience or by study,
Mm-hmm.
you
Mm-hmm.
know, to get you, you know, to get you all the information you need to go where you want to go.
Or seeking out experts like you or like myself, depending on what it is that they're looking for,
Yeah,
right?
right. Yeah, well, that's part of the education right there. I mean,
Yeah.
I'm sure you give of yourself the education to the people that you coach, and
Mm-hmm.
that's what I'm trying to do with the people that I coach. So
Mm-hmm. Yeah.
yeah, I'd say we agree on that. That's fine.
So everyone, you owe it to yourself to have financial independence, financial peace, financial security as much as possible. You owe it to yourself.
Right.
Yes, definitely. So let's get wrapping up here. I have enjoyed this conversation. It's been very thought-provoking and helping me look at things through a different lens because most of the people I talk with are just in the standard financial industries.
Right.
Yeah. So I appreciate your uniqueness. And for those that are drawn to you, what is one way that they can reach out to you? Is it your website? The rest will be in the description of the podcast, but
Right.
just one way
Yeah.
here.
Either the book, which gives everything that they how they can get in touch with me, or the website, theincomecoach.net, and that gives pretty much a description of what I do and how I get
Mm-hmm.
there,
Mm-hmm.
and the services that I provide.
Okay. Can they pick your book up on Amazon?
Any place. Amazon is, yeah, it's actually sold almost 4,000, almost 4,500 at Amazon alone.
Very nice. All right.
Yeah.
So Retirement Money Secrets is the name of his book. Yes.
Right.
Excellent. All right, you guys, I hope you've enjoyed this episode as much as I have. And Steve, thank you so much for joining us. And thank you for your time, your expertise, and caring about people and their finances.
Well, thank you for having me, Misty. It was a pleasure.
You're welcome. Well, you guys, until next time, have a wonderful, wonderful holiday season.
Thank you for tuning in to the Wealthy Mind podcast. Please be sure to download the Wealthy Mind app today and make sure to support your local Dress for Success.